Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, in last night's video, I named it "The Magic Bid Appears Again," as I mentioned in the live stream on Wednesday, and I continue to see this same type of activity that we saw after the presidential election. Unrelentless buying. The machines are running everything. They definitely were running everything today as we traded all of the indexes back into an all-time new high. We're continuing to see these prints just relentless and fearless. As I mentioned in last night's video, it's all about stimulus or the hopes of stimulus. It will be really bad if they can't get anything passed, but it's going to be, as I said in last night's video, it's going to be months before you see anything happen. Now, they might go ahead and pass the current stimulus bill that's been floating around, but as far as anything new and exciting, it's going to be a while, I think, before markets get satisfied and see that type of activity and something that they can really sink their teeth into and justify the rally that we're seeing right now. But this is in spite of all the turmoil around the government. We're seeing calls for the 25th Amendment to take Trump out. There's calls for him to resign. It's just absolutely crazy that that turmoil isn't putting any kind of fear in anyone. As I mentioned before, I think the same entity, which is probably the machines and the algorithms, are driving this thing, and this is the only justification that they have, and the expectation for a massive amount of spending and stimulus. I've talked a lot over the past several weeks with the fairy godmother, which is Janet Yellen, coming in, and her old colleague Jay Powell in the Fed, and they're just going to be printing money and making up money and spending money everywhere. Now, once again, we're likely to see the old Obama administration type deal. I actually am calling this Obama 2.0. Ultimately, we'll see all kinds of disasters, but no one will really care. They're just going to be throwing money, or it would appear, and this is at least how the markets are acting, that money's just going to be thrown at virtually anything and everything. As far as the economy goes, we're continuing to see kind of a mixed picture there. As we look back on yesterday, the unemployment claims came in a little better than expected, around 787,000. The continuing claims actually downticked. I thought we might see a slight uptick, but they're downticking for the wrong reason again. People are still leaving the workforce, and this is the way it's going to be for a while, I believe. So we ticked down to 5.07 million, and we still have, I believe, around 19.2 million people unemployed. And I've been talking about this universal income and other types of fillers that are going to continue to happen in the economy. I think sometime in late February, early March, we'll start to see maybe forbearance programs and other things that are blowing up right now come back in and be reconstructed so that folks will continue to move forward in the economy. It's going to be interesting, so hang on. As we end this week, my expectations are that we'll continue to stay stable. I don't see any big turnarounds. I'll go through all the details here in the technicals in a few minutes. We're really not seeing anything outrageous happening that would suggest that the market's just going to reverse and collapse. Let's go ahead and take a look at the charts, see how this week is going to end. As we review the WaveTech database, we come into the Portfolio Expert into the internal web browser and bring up the database. And once again, I talked about the short-term database holding the 65% level. Well, because of yesterday's highs that we made yesterday in the surge, we saw over 2,100 new buys, nearly 2,200, and only 300 sells. So we have bullish ratios on both models, 1.2 and 3.2, we went from 65% bullish to 77.9. And this is Friday, so we're going to see our intermediate models issue signals after the close on Friday, so that'll be also interesting to watch, as it's at 78%, to see if we get even further traction on the intermediate database. But this is a very bullish sign. It's recycling all of the trades again, which is a refreshing of the database, which just tells us there's more to come on the upside. I've been talking about this as I reviewed the database over the past week or so, that the forward-looking part of the database continues to suggest on a short-term basis there's at least 20 to 30 more days of a positive sequence, and that doesn't mean that every index is going to go up for 20 days, but the models that we're tracking 16,388 symbols. There's going to be, the bulk of these symbols are going to continue to show a positive move as we go forward. As I mentioned, the key thing that we're going to be watching will be the rotation that comes out on the intermediate database, and I will cover that on Sunday night's video. As we take a look at the S&P futures, we're seeing a follow-through tonight. We're up 17 handles, up another 0.5%. The futures are trading at 38.12 and change, and we're seeing them trade in toward the R1 level, which is 38.12. The high's been 38.13, so we've traded just above that. The low so far, 37.92. We have not come close to an S1, which is 37.79. But we're continuing to see some follow-through. The PPMs have actually turned positive substantially. We're now at a plus 0.35, so we're well into trend mode on the futures. PPM 2 at 0.15 and PPM 3 at 0.19. So everything is expanding. Otherwise, the trends are expanding. And just in the last 3 days, we've seen this continued surge. And I've been talking about this relentless buying that's coming in, and it's definitely machine and algorithm buying that we're seeing intraday, and overnight we're seeing some flattening or some not as much volume as we've seen over the past several days. Like we've seen, we're only 48,000 right now. Typically by now we're around 60, 70, and the other night when the elections are going on, we were looking at almost 200,000 contracts traded. So we definitely are seeing light volume overnight, but stable with higher prices. So we're going to continue to see this type of configuration come out. Now, yesterday, overall, with all the exchanges, we saw over 10 billion, 127 million shares traded on all the exchanges. So this was a huge day. It's one of the bigger spikes that we've seen over the past 6 months. So we're definitely seeing some climactic activity here, but there still appears to be more on the upside. As we look at the cash markets and looking at the market grid for tomorrow, it looks like the possibilities are for an R1 minimum, which is 38.16, R2 is 38.31. I suspect we will see that print, and S1 is 37.90. But the same type of configuration I was just talking about in the futures is we're seeing this sharp acceleration. Now today's a weekly close, so we're going to be watching the weekly charts, and any close today above 37.56 is going to be positive. And more importantly, if we close above the 38.03 level where we closed yesterday, we're going to signal further prices moving on a weekly basis next week. Now, the only thing that I want to point out here, and I'll cover this more on Sunday night, depending on what type of action we get on Friday, is the narrowing of the market grid, which typically will suggest we'll see some downside action. But I think the downside action is going to be somewhere around possibly 36.84 next week. But for now, everything looks positive. The next market that I'll cover is the NASDAQ futures. And we did see a sharp surge yesterday, and this was a leader in the market. We saw the S&P up 1.5% yesterday. The Russell was up 1.9, and NASDAQ was up 2.6. And we traded up toward the RXT number, which was 12,946. We printed through the RXT number yesterday, which was 12,946 with an intraday high of 12,959. Overnight, we're seeing some follow through, moving toward the R1 number of 12,996. The high so far has been 12,978 and the low 12,919. So we're trading in between S1, R1. Expectation would see at least an R1 and possibly trade as high as the R2 number. But today is going to be a squaring of books ahead of the weekend, I believe. So we'll see how the algos trade today. But that minimum expectation will be S1, R1, possibility of trading R2. I don't see us trading as low as the 12,784, which would be an S2 number. The 10-day moving average is 12,809. That's going to be your key demand line. It's been slicing through the activity over the past 4 or 5 sessions. That's where the market continues to oscillate above and below this, and it looks like we're going to remain above this with the ppm now at 0.24. The final market that I'm going to cover tonight is gold. We continue to hover just above the 10-period moving average. Currently it's at 1906. The low has been 1910, a high 1918. I mentioned in last night's video, I'm expecting to stay just above the 1900 level and most likely below the 1928 to 1930 level. The extreme that's allowed in this pattern right now would be up toward the RXT number of 1939 to 1947. The PPMs are starting to fade just a little bit, so this tells us that there could be further downside and we could trade back toward the 21-period moving average, which would be down to 1883, but this will represent substantial support. Now, some of the activity that we saw over the past several days has dissipated substantially, and it looks like we're going to continue to consolidate. I set this up on Monday night and continue to talk about this over the past several days, is that the expectation is for quite a bit of consolidation before this market will be ready to move higher. I suspect there's another 2 to 3 weeks of activity necessary before we'll see higher prices in gold. As I take a glance at the weekly chart on gold, you'll see the spike that we saw. We traded up to the 1962 level, which was above the RXT number, which was at 1950. Expectations that will stay above 1908 on a weekly basis, which is R1. And as I mentioned a minute ago on the daily charts, somewhere between 1900, 1928 to 1937 will be the upper end of this range. But if we do close at the lower end here and we close below the 1908 level, then we could see a further move down into the support, which would be around that 1880 to 1877 levels. This will complete the video for tonight. Thank you so much for another great week. We'll talk to you on Sunday night.